Okay, this is the live session on gold trading during the New York session. It's the 9th of September 2024. Let's move on to the charts now. Okay, here we are. Okay, this is the daily time frame, and I know there are a lot of horizontal lines here, but I'll get into explaining them. They're not all important for the session, so let's look at the ones that are important. I'll emphasize more on the ones that are important, and the ones that are not important I'll not talk about, and you will probably not see them on the chart either. So the open of this daily candle, so we're on the daily candle, we're on the daily time frame, and what I generally do is I look at the whenever there is resistance or support created on the daily time frame, I put down a line there, horizontal line there. So here we have resistance created on the daily time frame, which is at 516 to 516.76. So let's put a line there to 516.76. Okay, right. That's all that we do for the daily time frame. Now let's go down to the H4 time frame and look at the chart. Okay, so I had pre-done these zones, these supply demand zones, but I will be doing them again now for the purpose of this recording. So it's 30 minutes, it's about 20 minutes before the New York Open. So I generally come to the charts about 25 minutes before New York Open. So that's around 7:30, 7:40 a.m. New York time. And I draw 1 to 2 supply demand zones, about two supply zones above current price and 2 demand zones below current price. So currently we have a supply zone here. Let's zoom in here. We've got a drop, a base, and a drop. So we've taken that as the base in candle, and that's the high of the candle, and that's the open of the base candle. So that's one H4 supply zone there, right there. Okay. Then above that, we have a rally and a base and a drop. Okay. So all of that's one base. So the high of that base is that candle there, and the low of the rectangular box is the close of this candle, because that's also base in candle, because it has more wick than it has body, right? Now, so this candle I would consider the leg out candle. So that's the leg in, then we have the base in candles, and then the leg out, right? Now there's also, because there are two large candles here, and there's because this is such a large zone, there is possibly it's possible to we don't need to do it, but we could fine tune it on the H1 time frame. I kind of do that. So this here is this drop and this base and this drop, that's a supply zone right there. Okay, and the reason you see HLC here is a high liquidity zone. So this I don't consider a high liquidity zone, because if you go back to the H4 time frame, this supply zone did not break an opposite demand zone, or it didn't engulf an opposite demand zone. So I do not consider that as a high liquidity zone, even though it is still an H4 supply zone. I leave it as a supply zone, but I don't consider it a high liquidity zone. Now the reason I mark high liquidity zones is because that's where I look to take trades from during the New York session, right? So this is done about 20 minutes prior to New York Open, and then I look at these zones for the next 3 hours. So from 8 a.m. New York time till about 11 a.m. New York time, I look at these zones. I see if price comes into any of those zones to take a possible trade. So obviously, if price comes to this area, I'm looking to take a sell trade, and if price comes down here, I'm looking to take a buy trade. Okay, so let's get back here. Now here we could do this. We could make this there. That's possible, where that becomes a drop base, and then the other zone is above that. So we're about there, right? So that's 76 pips away, and that is 114 pips away. Now I will I will wait here. I'll wait a little higher for price to come. I'll wait here. If I miss out on a trade, I miss out on a trade, not a problem. But I'll wait here. I'll wait for my price action, for my entry somewhere here. So my entries are taken only on the M15 time frame. And that's the kind of setup that I'm going to be talking about. The analysis and the setup that I'm going to be talking about in these recordings. So the analysis is basically done on the daily and the H4, and the entries are taken on the M15 time frame. So that's the purpose of these recordings. So over the next few days, hopefully this entire week, I'll be doing recordings for each day during the New York session for 3 hours, and we will see if price comes to our area of interest or high liquidity zones to take a trade, right? And then you guys will be able to see exactly how I take my trade, okay? With where I place my stop loss, where the entry is, and where the TPs are, okay? Now let's go into demand zones. Here we have a drop and a rally. There is no basing candle, but there's a drop and a rally. And if you go down to H1 time frame, we'll probably see the basing candle, right? So if you go down to H1, because there's no basing candle on H4, so if you go down to H1, we see that a drop and a base and a rally. So that's where it's drawn. It's drawn on, that's where the H4 demand zone is drawn, okay? So okay, now here, this one is not a high liquidity zone because this demand zone hasn't taken out this supply zone yet. It hasn't taken it out yet. If it does price break through this supply zone, then this becomes a high liquidity zone that I will look to take a trade from, because then it's fresh, price has never been here before, right? On the way back, price has never been here before, plus it's taken out a supply zone. So for those two reasons alone, I will look to take trade there, because that's my definition of a high liquidity zone. That the zone has to be fresh. So here the zone is fresh. Here it's not fresh. Okay, price is already, you can see this candle is already testing this zone, so it's not fresh, and it hasn't taken out an opposite demand zone. So I don't consider it a high liquidity zone. But this is fresh. Price hasn't been here before, hasn't come here yet, and it's taken out this demand zone, right? If you look down here, we have a drop, base, and a rally. So that's a demand zone, right? And this demand zone has taken out this supply zone here, and price has not been here yet to this area. So I consider that as a high liquidity zone, right? Now below that, let's not worry about the zone here. There's a very small zone there. Again, I don't consider it as a high liquidity zone, so it's not important. Sorry. Excuse me. Okay. Now let's so this is what I do for the guys in the group. I will take a screenshot of this and post it in the group. Okay. Okay. All right. Now what I've done is here, just to explain what these yellow lines are. These are weekly support resistant lines. So if you go here on the weekly time frame, this is where these lines are based on weekly support resistance. Okay. So basically, I look at them on the daily time frame. They're kind of important to me on the daily time frame. Okay, they're kind of important just to see. So for example, now here price closed below this weekly resistance here of 2505 last week, right? The previous week it closed below as well. This week is closed. So there's a very high chance that price is going to probably push down now this week. Now that can happen on a Friday, that can happen on a Wednesday, that can happen on a Thursday, that can happen on any day of the week where price pushes down. Now just because we have a high time frame bias of price is probably going to push down this week. That doesn't mean we start selling, right? I will sell only from a high liquidity zone. Okay, and I don't hold my trades over the week. At the end of the session, the trades are closed, or when my TPs are hit, the trades are closed. When the stop loss are hit, the trades are closed. So, but that's just a high time frame idea of where price could go, because we closed, we pushed below 2530 on the weekly time frame. This candle couldn't close above. That was 2 weeks ago. The next candle closed below 25005 weekly resistance, and last week's candle closed again below 2505, also breaking below the previous weekly low. So there is a very high chance the price could go up, grab liquidity, and then towards the end of the week, continue down. So we've got CPI and PPI this week. So that's on Wednesday and Thursday. Wednesday and Thursday are going to be high volatile days, high volume days. So you could see that move probably happen on Wednesday and Thursday, or maybe even Thursday, Friday, right? So on Monday, Tuesday, this week, there's absolutely nothing much happening on Monday and Tuesday. I look at only the red folders. I'm on Forex Factory. This is my local time, so you just need to put your local time wherever that local time is. You've got to change that to your local time right there, and then you will see according to your local time what time the red news happens. Okay, so we have red news on Wednesday and Thursday, and Monday, Tuesday is nothing, Friday there is nothing, so Monday, Tuesday, and Friday should be regular trading days. Right, now let's go back to the daily time frame. So that's what the daily time frame looks like, right? You can see price bouncing off weekly support here, 2583, and then it bounced here at 2505, then it rejected here at 2530, and we closed last Friday, the candle closed below weekly resistance of 2505. Okay, so what we're going to do now is we're going to post this one on the group. I don't post the daily time frame every day because it's not needed, but I'll post, sometimes I do post it, and when I think it's necessary. But here right now, the H4 time frame is sufficient. Plus we have the weekly support resistance lines already on this chart here. So we go here, and let me just post that here. All right. So that's the group. That's the group for you guys to see. That's the group chat. This is what we do, what I do every day. I post the supply demand zones, and I post my analysis and the execution where I look to take a trade, and if there is any news, then I post that there is news, and I'll be waiting to take a trade after news. So that's every day. I post supply demand zones and where I look to take a trade from. Okay. Okay. So let's do the analysis of today. Price is testing H4 supply prices, testing H4 supply. So previous weekly and daily candles closed below 2505, weekly resistance 2505. Prices currently testing H4 supply. Now we go down to M30. We have there are daily SR. These are the daily SR lines that I showed you guys here, right? Yes, you see there's resistance there, there's resistance there, there's resistance there, there's support here, there's this support, this support. They're very similar, so I take the most I take the most recent one here, and there is resistance here, resistance here, there's support here, there's support here. So wherever there is support to daily support resistance, I put a line there, because price you could come and bounce off of those daily support resistance lines. My trade plan is not based off that, so it's not really important. These white lines, these dotted white lines, are really not important for my trading, for the way I trade. But I post it as a part of my analysis because there are some traders who do use them. So I post the most relevant lines for the day. So there is a line here, 250450. So there's a daily SR above current price around 250450. And then again, I take the closest round numbers, 250850, 250850, and then the next one, 251350. Okay, it's 251350. Now that's about 160 pips away. So that's kind of I don't want to look at these lines, because price would probably, if it does bounce, it's going to bounce somewhere off that, right? So maybe we can put in another one, 251650. Sorry, 251650. Okay, so those are the four lines, and then below current price we have now this one is not very important right now because it's in the middle of supply demand, right? So if price is going to bounce, I want a bounce off here. This is important, not that. Even if price does come there and bounce off, not really important, because that's in between H4 supply demand zone. So 248450, 48450, and 2471, 2471. Okay, now that's 260 pips. Okay, that's good enough. Okay, so price can pull back, bounce off, or reverse at any of these numbers that I just mentioned. Okay, now for buys, the price is below the EMAs. Now these EMAs is the 30-minute moving average, right? So even if you do go on to the M15, it's still a 30-minute moving average. You go down to M5, it's still a 30-minute moving average. The moving average doesn't change, right? It's still a 30-minute moving average, because again, I'm a session trader. So that's, if I don't consider the moving averages, but if I do look at the moving averages, I want to look at them on the M30, and I don't want to look at them any lower, right? That's a good time frame, a good comfortable time frame to look at, a good confirmation time frame to look at the M30, to look at the M30 time frame for the EMS. Okay, so these are basically, just show you guys what this is. So that's the indicator that I use. This indicator is available on MQL5. So this is the moving average. That's it. It's called crossovers and pullbacks. You can change it to whatever time frame that you want. I've set it to M30. You can put up to 6 moving averages here. There are 6 there, but I've given color on only 2 of them, to the fastest one and the slowest ones, and the slowest one, the 30 and the 60, right? But they're all on the M30 time frame. Okay, so it's a period, a period 60 and a period 30, but all on the M30 time frame. So there are colors just on 2 of them, and the moving average method I use is exponential, but you can change it to whatever you want, but that's the default settings. Okay, right now, price, yeah, where were we? Let's go back to our analysis. Okay, we have about 2 minutes before New York open. Okay, so for buys, I'll either be waiting for a buy signal from a demand zone, right? Let's go with the sells first. Okay, the reason I'm going to sells first is because price is below the EMAs already. So price is trading below the EMAs. Okay, so for that reason, let's put down the sells first. For sells, I'll either wait for a sell signal from supply. That's a supply zone, and that's a supply zone up there, and there's a supply zone further up there. So I'll wait from any one of these supply zones for a trade, or I'll wait for price to create, or I'll wait for price to pull back. I'll wait for price to, because we have already created resistance, but I'll wait for price to pull back a little bit further, create resistance on M30 time frame, and then for a sell signal to retest the London low. Where is London low? London low is, okay, so that's the London low, right? That's the London low. That's the area where London opened around this candle. So that's the lower point in London, and this one here, 15, 10, 30, 11. Okay, around there is the London high. So that's the London high. That's the London range. The high is there, and that's the low, right? So if price rejects this area, I'm looking for price to come down back and retest the London low. Okay, to retest the London low. Okay, for sells, I'll either wait for a sell signal from supply or wait for price to pull back, create resistance, and then a sell signal to retest the London low. For buys, I'll either wait for a buy signal from demand. Okay, so any one of these demand zones. So now here is a demand zone. As I said, I personally will not take a trade from here unless price breaks this, and this becomes then a high liquidity zone. I will look to take trades only from high liquidity zones, from high liquidity supply zones and high liquidity demand zones, right? That's personally me. But that is a demand zone, then that is a supply zone. Please remember that that is an H4 supply zone, so is that, and that's an H4 demand zone, and so is that. But I want price to engulf an opposite zone for me to be able to consider it a high liquidity zone and take a trade from it. Okay, so I will look to trade from that demand zone there. For buys, I'll either wait for a buy signal from demand, or wait for a buy signal, or wait for price to create a new high. Okay, so I'll look to take a trade from this demand zone, or wait for price to, maybe it won't come here, maybe it'll just break through, wait for it to break through, it'll create a new high in the New York session, pull back, create M30 support, and then look for a buy signal to go and retest that new high that it created. Okay, got it? So that's the second setup that I'll be looking for if it's for buys. Either buy signal from a demand zone, or for price to create a new high, pullback, create support, and then a buy signal to retest the current high. Now, you guys are probably wondering what I mean by buy signals and sell signals. Okay, so again, this indicator is available on MQL5. Here, signal candles, just go and change that to true. I have it switched off for now, and I'll tell you why I have it switched off, because I don't want a lot of arrows on my chart when I'm doing my analysis. So I have it switched off. I just go put it on true, and then you'll see the signals appear. Right now, when I post the analysis, I'll show you the analysis now. For buy sell, I'll wait for and then for price to create a new high, pullback, create support, and then a buy signal retest as high. Okay, so quickly, that is the analysis that I put down for the guys in the group, right? So previous weekly and daily candles close below weekly resistance, what we spoke about, 2505. Price is currently testing H4 supply. There are daily SR above current price. We spoke about daily SR and how I draw them, and I've given about four values above current price and about 2 values below current price. Price can pull back to bounce off or reverse at these levels. Execution for sells. The reason I put sells first is because price below the EMA is, so the bias is for sells because price is below the EMAs, but that doesn't mean in the session that price cannot pull back first. It could. You could get a buy signal that will work, and then price could continue down later during the New York session. Okay, that's a possibility too. So we don't jump into sell soon as we see a sell signal, or we don't jump into a trade soon as price gets into a supply zone. Right? For sells, I'll either wait for a sell signal from supply or wait for price to pull back, create resistance on the M30 time frame, only on M30 time frame, not on any other time frame. On M30 time frame, I need to see resistance, and then a sell signal to retest the London low. Now the signal can be on either an M30 signal or M15 signal. It doesn't matter. But resistance, always support and resistance for session trading. I personally wait for the M30 time frame for price to create M30 support or M30 resistance. Okay, so for buys, I'll either wait for a buy signal from demand or wait for price to create a new high. Right, so I explained that. So for price to create a new high in New York session, pull back, create support on M30 time frame, and then a buy signal, M15 or M30 buy signal to go retest the new high that it's created. Keep that in mind. Okay, that's what I mean by this. Do not take buy trades inside. Do not take a buy trade, or do not take buy trades inside or near a red rectangle. Do not take a buy trade here or inside here or very close to this, because it's a supply zone. Right? Wait for price to break out. Wait for price to break through this. Pull back if you want to take, and then take your buy signal. Right? The same goes for the opposite. Do not take a sell trade in this green box. Wait for price to break. But if you break this, there is another demand zone here, so be very careful, because price can pull back a little bit and then just continue up again, right? Because we've got a big demand zone up here as well. We've got a big demand zone here, so be very careful. There is no space between these two demand zones for you to be able to take a trade, hoping that there is more space to get to the next demand zone. If this green demand zone started somewhere here, then you would have this much space, so you could break, pull back, then take a trade to touch that demand zone. But soon as price breaks this demand zone, it's going to touch the next demand zone. So there is no space, unlike here. Here there is a difference. You can see the price breaks up here, pulls back, there is space. There's a clean space here, right? And this clean space is 80, it's almost about 90 pips to the supply zone. And if you were to go even further up, that's about 150 pips. There's clean space of about 150 pips for your trade to run. Right, so there is space. Here there isn't space, so be careful. There's a demand zone here, there's a demand zone. You only should be looking to take a buy trade in this area and not to sell in this area, right? So that's what I mean by do not take buy trades inside on here a red rectangle and sell trades inside on here a green rectangle, right? Now that's the analysis posted, and we post that. Okay, that's for the group. And if you're in the group, then you'll see this, you'll see the analysis every day, you'll see the charts, the H4 supply demand zones, and you'll see the analysis and execution that I look for every day. Okay, now the purpose of this recording, yeah, let's go and switch this off again because I want to talk about the purpose of why I'm doing these recordings. Okay, so we got rid of the arrows, the buy signals and the sell signals. Okay, now the purpose of doing this recording is because I want to show a different method of entry, right? A different method of entry is what I'm going to show. Hopefully, I'm going to try to show this week, right? If all goes well, I'll continue next week as well, but let's see how it goes. So, for the purpose of these recordings and these sessions that I'm going to be trading, I'll be looking to take trades only at high liquidity zones. Okay, so as I said, if price breaks this becomes a high liquidity zone. I will move this label up here, or I'll move another, I'll call this a high liquidity zone as well. And I'll be looking to take a trade from here and from here if my setup shows, if I see my M15 setup at these high liquidity zones. Okay, right. In terms of lot sizing, what lots do I trade? So now this account, let's see what this account is. Okay, so this account is $2,000. It's IC Markets live account, as you can see, right? So let's just we're going to be waiting for a while for a setup to form. Need swap commission. Okay, right. Okay, so at 2,000, that's about $2,000, right? So let me just show you guys how I have a lot size, and I have a fixed lot size guide. Second. Yeah. Okay. Right. Let's get rid of this. This is not important. Okay. So if you're in the group, there's a copy of this in the group here, which is here, right here. So if you go to risk management, under the risk management topic, you will see the Excel file here, and you'll see this is what it looks like. So this, you can just download this file and you can use it, right? And I highly recommend that for newbies and also for advanced traders, professional traders. Okay, this lot sizing guide. If you stick to this green column, you will never blow your account. Let me explain. This is basically the lowest lot size for an account balance of this size, right? So if you're session trading, so if you're a day trader or a session trader, and you're trading gold, okay, so this is based on basically for gold. but you can use this for any other pair, like probably like pound yen or pound USD, pound CHF, any of the pound pairs, because they have a very healthy average daily range as well. You can use it for them as well. But if you're using them for the euro dollar or USD JPY, maybe you'll have to look at the average daily range, because I don't know whether a stop loss of 30 or 50 might probably be too much, might be too much for pound for USD JPY or for USD CHF or Euro USD. I don't know how the pair is moving at the moment, so but it might be a little too much, right? But if it works for those pairs as well, then you can use it for them as well, right? So if you have a if you're trading gold and you use an average stop loss between 30 to 50 pips, and you have a $300 account, use a 0.01 lot on your trade, right? You follow this formula of this green, which is roughly about 1% of your account. It's very unlikely to blow your account, and this is your risk per day, not per trade, per day. Okay, per day, ideally per day. That's your. Now if you're taking another trade for the day, if you have a maximum of, let's say you take one loss and you want to take another trade, still stick to this lot size, right? Don't change it. This lot size is good, right? But then after two losses, please stop. Don't continue trading. You can come back the next day and look at the charts again, right? I try not to take more than two losses a day. That's how I trade. Okay, so basically on a $2,000 account, if you're risking about 1%, so that's about there, right? So that's about 0.04. Now that's one way to do it. If I'm risking 2%, then I can take about 0.08, right? But keep in mind, the further you go away from this, the higher chances are of you uh, losing a larger part of your account if you have continue to have a if you have continuous losses, right? And if you're trading this lot size, which is about 6% per day, it's a very high chance or almost guaranteed that in a matter of a couple of weeks or 2 3 weeks or even a month that you will blow your account. Okay, so stick to this side of the chart, this column. If you really know what you're doing and you are a professional trader and you know how to manage risk when price goes in drawdown, then you can trade this column. But I strongly suggest that nobody trades these two columns, because um, you will, over time, over a month, a couple of months, you will end up blowing your account, or even sooner, right? Now, there's another way of doing this. If you don't have access to the group, there's another way of doing this, which I will share now. Now, for those who want access to the group and want to know how to get access to the group, that's basically through MQL5. If you buy any of these products or rent any of these products, the indicator or the trade manager or any of the other trade managers, there are about four products on MQL5. Um, I will have a link down um, on the video where you can find my MQL5 page, and you can rent the indicator or the trade manager. The trade manager that I use is very useful, and I'll talk about this later how I use it. It basically manages the trade for me, so there's very little that I need to do. We'll discuss that later. Um, but again, talking about lot sizes, going back to the lot size, um, if you don't have access to this, and if you don't purchase anything from the MKL5 and you don't have access to this group, it doesn't matter. There's a very easy way to do this, and I'll show you that right now, and it's completely free. Okay, here, just go to my FX book and go to position sizing, right? You'll get a position sizing calculator. This is how it opens. This is the default window of how it opens. Leave it as it is. If you are trading gold, don't change this to gold. Leave it as Euro USD, right? Just leave it exactly as it is. Put your account size there, whatever your account size is. So mine is 2000, right? Put your risk size 1% or 2%. So for example, what I do is I want to risk, let's say the maximum I'm willing to lose on this is about $20 to $25, right? That's about 1%. So $20 is about 1%, right? So let's swap this with money, put that at $25. That's the maximum I'm willing to lose with including of slippage, right? So I keep about 4 pips on IC markets. I keep about 4 pips for spread and slippage. So inclusive of all of that, that's the maximum I'm willing to lose on a trade, which is about $25. So even $20. So let's keep it as 25 for now. And then the stop loss pips. So what is this? Now this, okay, for now let's put it as, let's say 40, okay? So that's 0.06 lot, okay? So that's roughly about the same on a $2,000 account, is roughly about the same thing. It's 0.04, 0.08, it's in between these two. It's about 0. So the value we got is 0.06. So that's about 6 micro lots. So it's in between these two columns, right? Which is a safe risk to trade at. Now, this stop loss value changes. It will change, right? And I'll show you the value that I put in there depending on the setup. We'll do that when the setup appears. We'll do that, or I will do one example now, and then if a setup appears today, I'll show you guys again, right? So let's do on Friday. I will show you on Friday how the setup appeared. I didn't trade on Friday, but I'll show you guys on Friday how the setup appeared. Okay. Now, okay, we've done lot size guide. I've spoken about that. We've spoken about H4 supply demand zones. We've done high liquidity zones. We've done these yellow lines. What's next? Okay, prices now very likely to break through this. Let's look at the M15 time frame. Yeah, very likely to break through this H4 supply zone, right? Now, until it breaks, we don't know, right? Because the price has to break it. Only when it breaks it do we know if it's broken or not. So for now, that's a supply zone, that's a demand zone. So there's no way that I would buy here. So if you go on to what I've done is the same indicator, I have it on this chart here, the exact same indicator. Let me just load the correct entry in DNY. Okay. True. Okay. Cross. Okay. That's the exact same indicator, right? On this chart here. Now, if you go to M15 time frame, you'll see a buy signal here. That doesn't mean I would take this. I would never take this. Why? Because that buy signal is right inside the supply zone. Now, price could break it, and we could get a trade here, but that's not my trade. It's not my trade because it's not my rules, right? So in a supply zone, I cannot buy, like I showed you guys in the analysis and execute in the analysis that I post. Do not take buy trades inside or near a red rectangle, right? Right there, it's written right there, every day. So therefore, I cannot take this signal, right? I've got to wait. Got to wait to see what happens. Right, so now price is very likely to break here. If it does break this, then this becomes a high liquidity zone. I said that before, because then prices, this demand zone has engulfed this supply zone, has broken this supply zone. If it breaks, let's see, it needs to break. It hasn't broken the top yet. If it breaks, then this becomes a high liquidity zone. Okay, let's go back to, yeah, I think we've covered everything. We've covered the weekly SR lines, we've done the daily, we've done these lines have done. We've done the yellow lines, we've done the white lines, we've done the H4 supply demand zones, we've done the high liquidity zones. I've spoken about the moving averages. I have spoken about lot sizing, and I've spoken about the time I wait to take a trade. Have I spoken about that? Okay. If I haven't, let me do that again right now. Okay. So in the indicator, here, active hours, right? So what you see here, the vertical lines that you see here, these are the inputs for those vertical lines, right? So you can set up to 2 sessions. You can trade the London session, you can trade the Asian and the London, or you can trade the Asian and the New York, or you can trade the London and the New York. You can trade 2 different sessions. I trade just the New York session. I trade just 3 hours of the day, right? So my first session is at 00 because I don't want to see any more vertical lines. And then my session 2 start time is 1400 hours. Now that is because of the time difference between the IC market server and GMT, right, which is about an hour. So I've set it to 14, right? Otherwise in GMT, I think New York opens at 1500. But because of time difference of 1, I've set it at 14, and then that's the end time of my session is 3 hours, so 14 to 17, but I've just kept an additional 30 minutes there. So roughly my trading session is about 3 hours between 14 to 17, right? So cancel this, close that. So that's the New York Open. So this is the first 30-minute candle of the New York Open that you're seeing here. Or if you go to 15-minute, now this is the second 15-minute candle of the New York Open. This candle here was the first 15-minute candle here, right, of New York Open. And this one here will be, if I go down to M30, so this is the 15, this is 1500 hours, right? Then that's 1 hour, that's 16, then that's 17, that's the second hour, and that's 18, and that's the third hour. So by 18, I generally, if I don't get a setup within the first 3 hours, then I'm done trading. I don't look for another trade, but that's set to another 30 minutes after that. So it says New York Open plus 3.5, right? That's what you see written here on the indicator. New York NYO plus 3.5. NY Open, that's a label that I've given. NY Open plus 3.5 is what you see here. And you can set it to however many sessions you want in the past. So prior sessions to show in the past, I've set it at 20. It doesn't matter if it's 5 or whatever, you can do whatever you want for that. The default, you can use basically the default settings of the indicator to trade. Okay, right. Now, okay, let's look at, okay, price did break through. Price did break that H4 supply zone as we expected. Now, this becomes a high liquidity zone. Let me bring that closer here. Let me bring that here. Now, I'm not going to, just because price broke this supply zone, I'm not going to delete this here. I'm not going to delete this box here, right? It's going to stay there because I want to see how price reacts here over the next 2 candles. If price continues to close above, yeah, we can comfortably delete this. But if price closes, this M15 candle closes up here, or the M30 candle closes here now in the next 3 minutes, 3.5 minutes, this candle closes, and then closes back in, this supply zone is still in play. Remember that, because we've closed above in New York session and we closed back in the supply zone. So this value, this 2,500 is a psychological number here, and then 2,505 is our weekly resistance. Keep that in mind. We discussed that here. We discussed that here, right? With our weekly time frames, we already discussed that. So here we have 2 very important price points, 2,500 and 2,505, right? But the area that I'm looking to take a trade from is this high liquidity zone here. right? If price doesn't come there and I miss out and price just comes here and goes down, that's fine. I miss out on a trade. But keep in mind that I said this before as well. There is a supply zone here on the H1 time frame. There's a drop, a base, and then a big drop here. So let me just put a line there, close 505.64. Okay, 564. Okay, so that is the start of that supply zone, right? These two are base-in candles. That's a base-in candle, that's a base-in candle, that's the leg-in candle, right? We have a leg-in, we have two base-in candles, and we have a leg out, right? So that's a drop, base, drop, drop, base, drop on the H1 time frame. Now, the reason I didn't mark it on that on the H4 is because I want price to come higher, but we just got to keep that in mind that there is a supply zone there, and it's right at this weekly resistance T2505. Okay, so now did this buy signal work? Of course it did. See, it worked. We've got a 26 pips. We've put your stop loss below this candle. You've taken a buy entry there as price breaks the high, and it went. You got easily above 1 hour. So just because a trade works, that doesn't mean that's my trade. That's not my trade, right? That's not my trade. There are many ways to trade on the charts. This trade is not my trade because there's a supply zone there. There's a clear supply zone there. There's a drop and a base and a drop. There's a clear supply zone there. So that's not the place I would look to take a buy trade. Sorry. Right. We are about 35 pips away from this supply zone. Okay, let's just go back to last Friday because I want to show you guys how I look to take a trade. Now, Friday was NFP. This green candle that you see here was the NFP candle. I don't trade news. You got to wait at least 15 minutes after news to take a trade. So you wait for this candle to close, right? So around 8, I think 8:30 a.m. New York time was this candle. I think around 8:30 a.m. And then this was the 9 a.m. This was 8:30 a.m. and this is probably 8:45. 8:45. Yeah, this was 8:45 a.m. Okay. This candle closed above. Let's see what happens with the price close backs in this zone or not. Okay. Now onto the left here. So let's just put a vertical line there on that NFP candle on the M15, and let's look at H4. What price looked like on the H4 time frame on Friday. This is that, and there was a clear supply zone here, right? There was a clear zone there. Okay, very roughly there was a zone there, and then there was a zone here. So price basically tested that zone, and then price pushed down, right, for the rest of the day. So the purpose of showing you this is just to show you how I place the entry and stop loss, right? So, and if you do get a setup today, you guys will see that. So this was that candle. We wait for the candle to close. This candle touched supply, and I don't see that supply here because now the zones have changed today. But it did touch Friday's supply zone. It went deep into it. And then what I do is I use the fib tool, and I will share details about this later. of how to draw this fib tool, how to use this, how to customize this fib tool from the low of this candle to the high of the candle, right? So that's where you start. You start drawing it from the low and you end at the high, right? So the high is 922 and the low is 769. 769, 922. Okay? Right. Now, as soon as this candle closes, or just a minute before the candle closes, you start drawing it. Okay? And you be ready, because now price has touched a supply zone. You be ready, and it's a high liquidity zone. So that zone was a high liquidity zone, because you can see that this here, this, you can see that this supply zone, that's how it would have been drawn on Friday, took out this demand zone, right? Let me just zoom in here for you guys. There's a drop, there's a base, and a rally. That's demand, okay? So if I were to draw it on Friday, I wouldn't have drawn it here, but because this zone is already broken, but this candle broke this. So this supply zone engulfed this zone. So that's a valid supply zone to me. And price has never come here before. It's never come here. It came close. It came close. Okay. It came close. Didn't touch it. So on Friday it came, broke through. So that's, and just above that there is more supply zones. Okay. There's more supply, and there's a supply zone right up here, which is still a high liquidity zone because price has never come to that area yet. It's not come to 2530 yet since it came. That it came close to 2529, but it never reached 2530. So that supply zone right there at the top there between, let me show you guys, right there, the open of that, which is 2530, price hasn't touched that yet. So that's a valid supply zone. That's a high liquidity zone. It's a good place to wait for price to come to. Okay, so let's talk about Friday again. So Friday price came here, came close to 2530, didn't touch it, but this was a valid zone, touched it, and I'm looking to take a trade from that area, from here, anywhere from here to here. In a 77 pip range, I'm looking to take a trade. I consider this entire area as a high liquidity because this has broken, price has never come here before. Okay, and the reason, because it broke this demand zone and it also broke this demand zone. You can see the price, this move down broke this demand zone, okay, and this demand zone. So that's a high liquidity zone. Okay, let's get rid of these now. Let me just continue this here to show you guys how I take that trade. Okay, and on Friday, this is what happened. So when price went up, it came into that red box. I soon, just before the candle closes, or when the candle closes, I draw this from the start here to the end here, and then you see sniper entry. So I measure this, which is 53 pips plus another, I said 4 pips for slippage, so that's about 57 pips. So then I go in here and I put in 57 pips, right? So the maximum I'm willing to lose for 57 pips is $25, and I calculate that, and my lot size is 0.4 lots. That's 4 micro lots. Okay. So what you can do is you can take a pending order here at this sniper as soon as price breaks. So we anticipate the price will not break further up because that's the setup. The stop loss goes 4 pips above this. So if it's 29.22, it's 29.62. That's 2529.62 would be the stop loss, 4 pips above this end of this fib, and that's the entry. Anywhere between 2523 and 84 and 2529 and 22, between this 54 pip range, you can take your entry. So if you got it even further up, better. You got a better price, right? And then you look to take your TP for the session, wherever you want to take it, right? What I've done is, now let's talk about the trade manager. So here's a trade manager. So I've put this as 60 pips. Obviously, when I would adjust it, it will open. Now, if I open a trade here, let me put on auto trading. Okay. So now that gives me a 60 pip. See that stop loss is at 60 pips. As you can see, that stop loss here is at 60 pips. It says minus 60, right? So I would adjust it to whatever 53 plus 4, which is about 57 pips or whatever, right? Adjust it there, and then don't worry about the TP. Don't worry about the final TP. 50% of my position would close at when price gets to 20. No, I mean 40. Sorry, 40% of. Now you can change these, right? So partial close 40% of my position. So 40%, that's a percentage sign, would close at 20 pips, right? And another 25% of the balance position would close at 50 pips, right? Now, and then after that, you can set your final TP to wherever the opposite H4 demand zone is, right? So in this case, when you're here, this was the opposite demand zone on Friday, right? This was the opposite demand zone, and we broke right through it and we went to the next one. So you could set your TP just above that. That could be your TP, right? So, but I would not hold the entire position all the way down because we don't know what could happen. So that is why I take small positions off. So this, instead of 40% here, it could be 25%, whichever percentage that you're comfortable. You could take 25%. You can take 20 pips at 25%, or you can take 10% off of your position at 20 pips, right? Take something off so that if price does turn against you, you lose less than what you intended losing. So if I took, instead of 40, if I took, let's say, 15% off at 20 pips and price did reverse and went and hit my stop loss, I will not lose $25. I will not lose $25. I'll lose less than that, right? That's the game, to lose less than what you planned for the day. So $25 is the maximum I plan to lose for the day on a $2,000 account. I don't want to lose this. I want to lose less than this. I want to lose 20, 18, $19, even $21 or $22, less than 25, right? That's the point. And if it did hit, so I lose less because I would close part of my position, and then I would lose less, right? Or if it didn't, 20%, 40% would close at 20 pips. Then, so that would be about, let's say, out of 4 micro lots, half of it, let's say 2 would close at 20 pips. Out of the balance 2, 1 micro lot would close at 50 pips, right? And the balance 1 micro lot would close at my final position of my trade, right? When price hits about 51 pips, which is about there, right? My stop loss would come to break even at 51. Stop loss to BE at 51 pips. It would come here. So then, even if price comes to 50 pips, which is roughly about there, it comes there, and decides to reverse, it would hit my break even point, right? I lose nothing. I've still collected something. I've collected something at 20 and 50, but I don't get my final position because price did reverse, right? So in this case, it didn't reverse, it came right down to the TP. So the reason I wanted to show you this example is to show you how I use this free tool on IFX book to calculate my lot size. So even if you had no access to the group or to the Excel sheet, you don't need that. You can control your risk here. You can know what lot size you need to trade for your setup or for the day just by putting the right values here and by having a right entry method. All right, so here now we have a trade open here. I just want to close this trade. I go and click on delete pending, and the trade gets closed. If I click while a trade is active, if I click on 50% or 25% or custom close, it will close percentages of my trade. So it will close 25, it will close 50%, and for my close custom, I've set it as at 10%. That's close custom at 10%, right? So that's the input for this trade manager. Again, this trade manager is available on MQL5. Here, aggressive risk control settings. We will talk about this in another session. I'm not going to talk about it now. Right now, it's switched off. It's not. I've switched it off for this session trading. So you can see that it's false on everything. But if you do want explanation on this, if you go to the MQL5 site and go to this, if you go to this expert advisor, this EA or this trade manager, you will see you will see examples of all of this, of how this aggressive risk control setting works, right? I don't personally use it, but there are traders who use it, who want to be very aggressive in controlling their risk. They like that feature. They like being very aggressive, right? And these are successful traders. The norm is that retail traders don't manage risk. They don't manage risk at all. But the opposite side of the ones who are consistently profitable are the ones who manage risk. And then going beyond that, there are traders, not only do they manage risk, they aggressively manage risk. So this tool, these inputs, right, this trade manager is the only one of its kind that aggressively manages risk on your behalf. You don't have to be at the chart. You don't have to do anything. It'll manage risk. Whenever you go in drawdown or whenever price starts going against your trade, it'll start to manage risk, right? You can see the examples there. We will talk about it in a different session, but not today. Okay, so what's happening with our trade? Let's get rid of all of this. Okay. Price is closed above. Price moved 52 pips from that M15 candle. Let's see what happens. There's a high liquidity zone here, and there is a all right, guys, just give me a second. All right, guys. Yeah. Okay. Prices approaching. Prices still pushing up. Approaching our area. Now. Yeah. Okay. So this 30-minute candle will close in 10 minutes, right? And that's also the hour close. That's the hour close. So if that hour 30-minute candle closes above this again, right? And that'll be two 30-minute candles closes above this supply zone. Then we delete the supply zone, right? But you got to wait for this candle to close. Because if this candle closes back inside here, then it's different. Then the supply zone is still in play, right? So we got to wait for this 30-minute candle to close, and that's basically our close. Now on the 30-minute, that's your rally. That's your rally there, and then your drop here. So there is so there's supply right there. There's 30-minute resistance there. There's also 30-minute supply there, right? But that's a long way from price. It's another 130 pips away. Price may not get there today, or maybe it will. We don't know. Gotta see what happens. And we have on IC markets, we're using IC markets or a similar server time or a similar server. Then there is an hour and 8 minutes for the H4 candle to close. 1 hour 8 minutes. Okay. So we got to see how this candle is going to close. If it's going to close above, then price could continue up here. If it closes somewhere here, we could continue up here. Let's see. It's a long way. It's a long way from now. We don't need to guess on what may or may not happen. Let's just look at what's happening right now, and all we can see is there's a 30 minutes that's going to close in about 7 minutes. Let's see if it continues to close above this, then we delete this search for supply zone, and then we wait. And this is our area of interest, this red box here. This is where I'm looking to take a sell trade. This is the area, right? This is the area. I would like to take a trade here, right? I don't know. I may not get an opportunity to take a trade here today. I don't know. Price may reverse here. We'll have to see. But for sells, I want to take a trade here, and for buys, I want to take a trade here. I'm not trading anywhere here, at least for now. For buys, I want to take a trade here, and for sells, I want to take a trade somewhere here in this area here. Now, when the H4 candle closes, then it's a different story, because then we're going to have to readjust. I don't want to say redraw. I just want to say readjust the two closest supply demand zones. We need to readjust them, right? depending on where this candle closes, depending. So for now we wait. Yeah, for now we wait. Yeah. I'm gonna mark this out. This high is 1851, 8551, 564, 851, 564. Okay. Right. So that is marked out now as an area of interest. The supply is a supply zone, H1 supply zone, because this supply zone here took out that zone, right? That was a supply, that was a demand zone. That was a demand zone, and price, that supply zone took that out. Okay. This supply zone took this demand zone out. This supply zone took this demand zone out. So that's important. So, but still, I would like price to get up higher. It's about 35 pips away from here. I would like it to get up here. I would like it to get up here, in this area, in this candle. This is the area that I'd like to get it price to go up to, because there's a wick here. If you go to M15, see this candle here? This was towards the end of the 3 hours or 3.5 hours, that the first 3 hours or the first 3.5 hours of the NY session, right? Towards the end of it. That's roughly when, that's around 11:30 a.m. New York time. That's around when traders break for lunch, about 11:30, 12, and that's when that big move happened. That big move of a 300 pip move happened right at this candle, starting at this candle, right? Boom, 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 straight down. So I like to see price get up here, and that's exactly aligning with my H4 supply zone. Exactly. You can see this, where this price is. That's the low of the candle is 2509.41, and if I go down to M15, close 2508.75, right there. It's very, just a pip away, probably a couple of pips away from my zone. That's, I like this. This is where I want price to get to, because that's where that big move started, 300 pip move on Friday to go down. So the NFP move, which was about 250 pips, that was the that's the spike up for NFP, and then the NFP move itself was 250 pips. But after that, price consolidated, grabbed more liquidity, and moved another 300 pips. Right? So there is what we as traders, we want to find the correct move of the day, not any move. I mean, you can take any move, you can take any small move and still be consistent profitable. That entirely depends on your risk management and lot sizing. If you're over trading or over risking, that it depends on those two factors. Your profitability, your consistent profitability, doesn't depend on anything else. Doesn't depend on your entry method or anything. It depends on your consistent profitability, depends only on whether you over risk or over trade. That's it. Those are the only two things that it depends on. So you might have the greatest entry method, and if you're over risking and over trading, you're not going to be consistent profitable. You might have the likewise, if you have the you might have the shittiest entry method, but if you know how to manage risk and know how not to overtrade, you can still be consistently profitable. Now M15 price is pushing down. The M30 candle is coming back down. Mm-hmm. Mm-hmm. This could just be a pullback to continue up. Let's see where this M30 candle closes. 40 seconds. 40 seconds. This could be a pullback to continue up. Price could pull back here to this area here and continue up. That doesn't mean we take a trade from that doesn't mean I take a trade from there. My areas are very clear right at the beginning, right at the start of the session where I plan to take a trade is set beforehand. Okay, so the candle closed above the supply zone and price is pushing down. So on M15, if you are using the indicator, you would see an M15 signal right here on this candle, right here. Look at the candle. Sell signal, buy signal, worked. Got 52 pips, 26 pips. You probably got you got 2 RR on the trade. Here, you got a sell signal, close. Not my trade. No, my trade. There's M15 sell signal there. I need it to come to my area of interest. I need it to come here. This is the high liquidity zone that I'm waiting at for a trade. I need price now. This could work. This M15 signal could work. Price could, that's 34 pips. Price would come down 34 pips. I don't know. It may or may not. I don't know. But it's not my trade. Yeah. We wait. We wait. If you look at the daily time frame, price is just right now bouncing between these two levels right here, 2505 and 2483. It's not touched either of them. It's right in the middle. Right in the middle. We have weekly resistance here and weekly support here, and we're right in the middle. We have not touched either of them. I don't know. Let's see. Let's see if we could. There's a very high chance the price could probably touch the one above, but we don't know if it's going to close above. The daily candle is going to close above or close below. It's too far now. We got almost 8 hours for that, so I have no idea what's going to happen. Absolutely no idea. These lines are just to understand that there are these, as I said before, these yellow lines here, weekly resistance, weekly support. These are just to understand that they are very important price levels on the weekly time frame. So you cannot remove them or disregard them. That doesn't mean you look to take trades from there. At least in my trade plan, I don't look to take trades from those lines. But it's good to know where they align. And here you can see weekly resistance. Price is already pushing, trying to push down 50 pips. We didn't even touch it, and still, so you can see how that it is somewhat important, that area. But as per my trade plan, I wait. Now here, let's talk about another aspect on the indicator. You see these price levels here: 2500, 2550, 2450 here, right here. You can see that horizontal line 2450. That's here. That also is a part of the indicator, and that's here. There you go. Chart levels, right? So you have super levels, which is your triple zero numbers, like your 2000. So 2000 would be a super level, 3000 would be a super level, 4000 would be a super level. Then you have your medium super level numbers, which are your 500s. So which is your 500, right? And then you have your main levels, which are hundreds, right? And then your sub levels, which are 50s. So I have it set to this. So if any of you guys are using the indicator, then I think the default settings should show you this. This is the default settings, I think. But any which way, this is what I use. So that's set at 1000, that's at 500, and that's the colors are gray. I think this is the default. These are all the settings that I do show you here, all the default settings. I've not changed or customized anything. The only thing that you would probably have to change is your time, because if you're not using IC markets, then you would have to all change it according to your broker server. And how to find out how to do that is to just either you can find out, you can send an email or chat with your broker if they have a chat option, or send them an email to their customer support and ask them what their server time is, the difference between their server time and GMT, how many hours is that, or what their current server time is. Because if they tell you what their server time, then you can find out the current GMT time and find out the hour difference between GMT and server, and you put that down there, and then you set this. So if you put that correctly, this should automatically line up, the vertical line should automatically line up correctly. But if you didn't want to do that, if you didn't want to contact your broker, then there's an easier way to just look at New York Open. New York Open is 8 a.m. Eastern Standard Time. So 8 a.m. in the equivalent of 8 a.m. In your city or your country, right? So there is a free website, there's a free page for that as well, and this is it: forextimezoneconverter.com, right? So you go in there, you put in your time zone, whatever your time zone is. So go change it to whatever your time zone is, okay? Whatever city, whatever country, go change it there. And then you should get your equivalent. Then for New York Open, you should get, for Frankfurt, you should get the equivalent for Frankfurt in your time. London Open in your time. US New York Open in your time. Sydney Open, Tokyo Open in your time, depending for trading these sessions or not, right? So right now Sydney is closed, Tokyo is closed. You can see that it's closed, okay? But New York is open. This is the time that I trade gold. So this is open right now. So again, this is there is a link to this in the group chat. But if you're not in the group, then that's it, easy. forex.timezoneconverter.com. Okay, go change your city and figure out the time, and then once you do that, just make sure that your vertical lines align exactly that. So just play around with these times, and this number here, or play around with these times for New York. If you're trading the London or Asian, then you can use this as well. But if you're not, if you want to trade only the New York session, then keep those at 0, 0, all of them, and trade only the New York, and set those vertical lines according to the time zone converter, so they align exactly at the time that you're trading. So when the New York candle opens, basically, when the first M15 candle opens, which is this, it should be right at that line. So whatever that time is in your city, where you live, this should be the first 15-minute candle at New York Open. Right. So we're waiting. So now we can see that the push down was only a pullback, right, to spring up again. If you go down to the M5 time frame, you can see the price rejected to 500 and it's pushing up. Again, not my trade. There are a lot of people who take these trades, and that's absolutely fine. There's nothing wrong. There's absolutely good, not only good, it's very good if this is a part of your trade plan. If you take a pullback from a round number, or you from a pullback from a price breaks resistance or price breaks supply, and you wait for price to pull back, and then you wait for support to form and you take a trade, that's part of your plan. Absolutely fine and fantastic. Not a part of my trade plan. So I got to wait at high liquidity areas, because that's what my trade plan says. Wait at high liquidity areas to take a trade, right? Yeah. So 5 minutes for this candle to close. Very likely going to close above. Yeah. Just look at that here. Anything else in the indicator? That is all the default settings. So if you get the indicator, then you'd have all of this. There is automatic support resistance lines that are drawn by the indicator. I don't use it, and in the default settings also it's switched off. If you are a support resistance trader, then this will suit you. This will be ideal for you, because the indicator draws support resistance lines for you on whatever time frame that you select. Up to 3, you can select up to 3 time frames at a time. You can change these to whatever that you want, all of these time frames. Yeah, I don't use support resistance to trade. I use supply. I'm a supply demand trader, so I don't use this. Then we spoke about crossovers and pullbacks. That's the EMAs that I use. If you use any other sort of moving average, this is an ideal input or ideal tool for you guys. There's this indicator. The beauty about this indicator is it has a lot of tools in one indicator. A lot of it, right? I mean, just look up the go to MQL5, go on the link that I'll share below the video. All of these, you'll find all these. You'll find all of these. You'll find pictures of all of these, and then they've explained. And then if you do, if you do send me a message or do join the group, I'll share the user manual with you, which is a very lengthy user manual, and you can read it in detail. And I do suggest, and I do strongly recommend to all users of this indicator to read the user manual in detail, because it's taken me years to develop all of this. So it has there's a lot of features that I don't use. But there is a lot of features in this. There is for those who use high highs and high lows and lower highs and lower lows, there is there's a setting that shows high highs and high lows perfectly, right? It's all inbuilt into it. You can look at that. It has a candle countdown. It has a symbol. It tells you how much time you have left until the current candle closes. It has symbol spread, shows you the current spread of the instrument that you're using. It has a trade info display. If you don't want these, you can switch them all off. If you just change the color, then they just kind of disappear off the chart, right? It has a trade info panel that shows you your current losses or gains, your today's losses or gains, and your weekly losses or gains, right? It's got a ton of stuff. It has previous day high and previous day low. I don't use that. It has your daily open price. I don't use that, but it's got a lot. Yeah, it's got a MACD. I don't use that. Again, there's a lot. Okay. Let's get back to our chart. Prices approaching our area of interest. Right, yeah, we are okay. So now, once this 15-minute candle closes, which is closing now, sorry, once this 15-minute close, which is just about to close in like 15-20 seconds, I'm going to delete this. All right, I could have deleted it at the previous candle, but I just want to see if price will continue down. But obviously, it's pushing back from 2,500. It's a great push up, about 50 pip push up, and now we've touched 2505. Okay, so now we delete this one. Okay, we don't need that anymore because that's our next supply zone now, right there. Okay, that's where I'm waiting for price to come to, somewhere here. Okay, now you can see here price on the daily time frame, we've touched 2505. Now we got to see what's going to happen here. Is price going to react to this and continue down, or are we going to close above and continue higher? We wait. Sorry. Okay, price is reacting to 2505. Right now, this candle 1615. This candle opened at 1615. Let's go to the M1 time frame. Right. 1615. So the second candle of the M15 time frame broke the high of there. We wait. We got to see price needs to get up to our area. It's very close. And the 15-minute candle got to close. Remember that. Remember this example? Remember this example that I shared? Price got into our supply zone. I've drawn this before. I've drawn the red. This 15-minute candle got into our zone. The candle has to close. The candle has to close. Only when it closes can we use the fib tool to draw this. Okay, we've got 12 minutes. We're very close, so we've got 12 minutes. So let me just, in that 12 minutes, it's a good time to explain to you guys how I use this fib tool. The fib tool is here. Draw Fibonacci retracement. Okay, we just delete it here. There, that one. I click on that now. I've customized it, right? I'm gonna now show you guys what I've done. Very simple. go to fib levels, right? You start with a 0. You just put in these values first. Okay, let's discuss these values on this column on the left. Start with a 0, 0.25, 0.5, 1, and a 2. That's it. Very simple. Again, 0, 0.25, 0.5, and a 1 and a 2. Right? Okay. Once you do that, you name your 0 end, leave a few spaces, about 2-3 spaces, and put these 2 characters, percentage, dollar. When you do that, you will get the value here on the Fibonacci. You'll get the value, right? You get the value when you do that. So space, the reason I need the value there at the end, because that's where 4 pips above that is going to be my stop loss. So I need to see that value to add 4 pips to it. For IC markets, that 4 pips is the 4 pips that I keep in case there is slippage and for the spread. That's the reason I keep 4 pips. So depending on the broker that you use, you can decide what that is, if it needs to be 5 pips, 6 pips. So basically on IC markets, the spread for gold is about about 1 pip, right? Or 0.5 pips. So these are points, right? It's about a pip. Okay. So I keep 4 times that, right? So for example, I keep about 4 pips above that. 3.5, 4 pips is fine, right? In case you need to. Then 0.25, you name it as sniper entry. That's where I take my entries, sniper, right? As I showed you here on Friday, that's where I take my entries. And again, space, percentage dollar. Then the next one is 0.5 is 1 hour. So as soon as price comes here and touches this, you have reached 1 hour on your trade. Okay. Then the next value is 1. So that's where you put in your start. You type in start there, or 3 RR, right? So that's where the fib, you start drawing the fib from that point. Your candle from the candle that you start to draw, that's your starting point. That's why it says start, right? And that's also that level, if the trade goes in your favor and you come there, that is 3 RR. Just keep that in mind. That is 3 RR of your trade. So if you haven't closed anything above here, that's a good place to start closing some positions because you've hit 3 RR on your trade, right? And again, there I want to see the value, so that's why I put in percentage dollar. The next one is 2, right? If price gets there, that is 7 RR on your trade. So if you haven't closed anything above here, that's a good place to either close your entire trade or at least 80-90% of your trade, because that's 7 RR on your trade. Okay, got it? Done. Okay. Yeah, we've been here for about an hour and 45 minutes now. Price is just ranging. We have about 40 minutes for the 4-hour candle to close. 37 minutes for the 4-hour candle to close. So let's see, and it's very bullish right now. There's clean space up here. Clean space up here, and it's very bullish. I don't know. Let's see. We may not get a trade for until the next 4-hour candle opens, and maybe even about an hour after that. Yeah, an hour after the next 4-hour candle opens, 1 hour, 1.5, about 1 hour 50 minutes after the next 4-hour candle opens, is the end of my trading hours. So that will be about plus 3 hours into New York Open, after New York Open, plus 3 hours. So wait, it's a Monday. It's a Monday. There's no need to rush. Just wait patiently. We wait patiently. Now, just keep in mind that this 2505 is very important. It's weekly resistance. Price has touched it. Okay. Also keep in mind that is right at that supply zone. So we could take a trade if this candle continues to close. We could candle needs to close. Let's see, there's another 5 minutes for the candle to close, so there's no rush here. Could take a trade here, 2504 with about a 16 pip stop loss, because this 2505 is very important, and that's a big drop here. That's the start of here, this open, candle open is 2505.22. Price broke below that and dropped 200 pips, and we're back there for the first time right now. So it could, I would reduce my risk if I took a trade here, because it hasn't touched that red box. I would have loved it to touch that red box, touch that line, that red box, or even go further up, but it hasn't. And we're rejecting that weekly resistance. You can see price rejected here, rejected, then broke above, closed above, continued, came back, pulled, rejected, continued up, came here during NFP, rejected, pushed back up, came down, closed below, and now for the first time after Friday, price has come back there. So 3 minutes for the candle to close. Let's see how it closes. This high is 526 and the low is 0017. 0017, 526. Let's see how this candle closes. And if I were to risk just $15 on this trade, so that is 13 plus 4 is 17. 17 is plus 4 is the spread that I keep and for slippage. So now, instead of risking $25, I'm willing to risk $15 on the trade, because it's not exactly where I want it to be. It's just a few pips below. Right? So that's 0.09 lot. So what I would do is, just a couple of minutes for the candle to close, 0.09. That's the maximum lot size I'm willing to take on this trade. And 250.26, 0.26364666. Okay, right. That is my stop loss. 250566. It's in a minute and a half for this candle to close. A minute and a half. My entry has to be either 3.99 or 2504 or higher, and that's my stop loss if I'm wrong. And once I enter the trade manager takes over if I'm in profit and does the rest. So I don't manage. When the trade is in profit, I do nothing. I just let the trade manager do the rest. But when the trade goes in drawdown and starts getting closer to this, I might close 25% of my position or even 50% of my position because I don't want to lose the entire $15. I have reduced my risk already, but I still don't want to lose the full $15 that I'm planning to risk on this trade. Okay. Now let's look at the M1 time frame. Yeah, we have the M5. Yeah, that's a nice rejection there. 12 seconds more. Where is this candle going to close? 5 seconds. Yeah. Okay. 95.99. Let's make it a round number 400. So that is half of my position. If price touches that I'm in, price goes further up, I'll take another 4 micro lots. So that is, I'm allowed to take 0.09, so I'll be taking 0.04 here, and maybe if it goes higher up, 0.5, another 0.04, and then 5.26 is my stop loss, 5.66, so copy that. And my stop loss is, so I change that to paste, modify. That's my stop loss. And it's a trade. It's possible the trade price can go can go higher. It's very possible the price can go higher, and I get a setup there in the red box, and this turns out to be a losing trade. And if that's the case, I will give my trade a second chance. That is why I have reduced my risk to $15. I'm willing to lose only $15 on this trade and nothing more. My second position, I'll take it here, right there at that rally base drop. So the close of that candle is 465. Modify 465, perfect. Stop loss, same stop loss as before. Now, will price come there? No, I don't know that. I have no guarantee. Could price continue down 50, 75, or 100 pips? Of course it can. Price can do whatever it wants to do. It can do whatever. It can go spike up here and stop me out too. But this is my trade plan. Right? I would like it to be a little higher, but this 2505, its weekly resistance is very important. It's a weekly resistance area. Price could go up 40, 50 pips above this weekly resistance and then come back and close too. And if that happens, then this trade would be a losing trade. And I will look for a setup high. But for now, I'm willing to lose $15 on this trade. I missed it by a pip. 1 pip. It came up. 1 pip it came up. We might miss it. Price might continue down. Price might just continue down because you've rejected this line and could continue down. I don't know. Missed it by a pip. My entry. 1.1 pip. It's gotta be patient. If you miss this, no problem. We patiently wait for the next setup. Also keep in mind there is just 24 minutes for this 4-hour candle to close. Gotta keep that in mind. So if this trade doesn't get active, I'd say with this 15-minute candle, which has another 8.5 minutes to close, I may close it because I don't want to have a trade open at the open of a 4-hour candle, because several things can happen when a new 4-hour candle opens. There is new volume that comes into the market in forms of new orders coming into the market and previous orders closing. So there is the open of a 4-hour candle, not always, but at times, more often than not, can have a lot of volatility. Orders being closed at the end of 4 hours, the algorithm closing orders, and new orders coming into the market. So you don't want to get caught right at the open of the 4 hour with a trade. It might just be better to wait 30-45 minutes after the 4-hour candle opens to look for another setup. Might be wise to do that. It's a Monday. It's nice. There's nothing happening. There's no news happening today, so there's no rush. 7 minutes for this candle to close. Seven minutes for the candle to close. We have a 15-minute push up into weekly resistance, which is near the H4 or H1 supply zone, which is a high liquidity zone, not just a regular supply zone, but a high liquidity supply zone. And we have price rejecting that area on the M30 time frame, rejecting it, on the M15 time frame, rejecting it, on the M5 time frame, rejecting it. So even on the H1 for now, 20 minutes, but we don't know. We don't know where this H1 is going to close. This H1 might just close above and continue higher. So, and once this H1 closes, that will be the open of the new H4 candle. So that's the reason I don't want to get caught into a trade at the close of this H1 candle, which is 20 minutes from now. And we have about 5 minutes for this M15 candle to close. One three, and this side was 526. It's likely that this candle, the next candle, will break this M15 high. Very likely that the next candle will break the M15 high. But what we don't know is if it's going to break the high and continue down, or break the high and continue higher to break this high. We got to decide. We got got about 4 minutes more. If price does get us entry here, if it does push up and gets entry here, then we can anticipate the next M15 candle to break the high and continue down. But if this candle does not get us entry here, then it's that last M15 candle before the 4-hour candle close, which I'm very reluctant to take a trade on. The last 15-minute candle of the 4-hour candle close. 3 minutes more. Let's see what happens. Yeah, about 5 pips away. About 4 pips away from my entry. Two minutes away. Let's see how this 4 candle is. 4 is strong bullish. It's closing strong bullish. Yeah, it's closing strong bullish. Now, once this candle closes, this becomes a demand zone. We've got a drop, base, and a rally. There's a demand zone right here. Right here. 75 pips away. Right here. what I would ideally have wanted, this candle is just about to close, in about 30 seconds. But what I would want to have seen is once I drew this fib for this candle to touch this sniper and pull down, which didn't happen. It came very close. It dropped 36 pips. We missed it by a pip. Our entry, we missed the entry by 1 pip, 1.1 pip, and it pushed down 36 pips. And the next candle, if it doesn't break this high, could just pull back here to 2.7, 2.5 area, 250, 2.5, and then continue lower. We may not get entry here. Because now we're at the last 15-minute candle of the H4 candle close. Price could probably just come up here and then push down. Yeah, it could come somewhere here. Might create the top wick and push down. Or because it's the last 15 minutes before the H4 candle close, could just continue high. And then I'm just worried about that, because if we break this high and because it's the last 15 minutes of the H4, we could continue high and close a strong bullish candle, because price is pushing up on the H4 time frame. I dislike taking entries on the just before the H4 candle closes. The New York Stock Exchange opened just about 15 minutes ago, so there could be volume now. Usually, in New York Open, if there is no volume, the next volume block is the New York Stock Exchange session, which is an hour and a half after New York opens. So that was about 15 minutes ago. Yeah, so price seems to be rejecting that area, created a top wick to push down. Price could now continue down low. Could continue down low. It's created a top wick. If it has to push down, if this M15 candle has to close bearish and continue down, it could do it right now, because we've created the top wick. But it could push higher and close a strong H4 bullish bull candle, which then I'm going to have to manage risk, because I don't want to lose my entire risk to this trade, purely because it's taken at the close of the H4 candle. We've created a top wick, and price is pushing down. Top wick, price is pushing down. This M5 candle is just about to close, 40 seconds, and the candle closes. And we created the top wick to push down. M15. There you go. You broke the high. 386. This high. 386. 386. I didn't break the high. You just tapped the same high, created the top wick, and now you're pushing down. And you missed it. You missed entry still again by a pip. Price did not come to our entry. I I prefer taking limit orders as do market orders. I prefer taking limit orders. I prefer waiting personally. That's just a personal choice. I like waiting for price to come here and get me tap my entry and come down. But you know, sometimes it doesn't, and sometimes you just have to live with the fact that you missed the entry by a pip, right? Because price dropped 36 pips, and now if that's the top of the wick of the M15 candle, then it'll break this low and continue further down. And then this setup is after that no longer valid because the trade is done, right? And I didn't get my entry, and that's okay. That's absolutely fine. I I wait. I will wait for the next setup, maybe tomorrow. But that's always been my plan, waiting with a limit order for my entry. Okay. And just because for 1 or 2 days of the week, price just doesn't, gets to my entry and misses it by a couple of pips. That doesn't change my trading plan. Yeah, that's it. I very much doubt price is going to come back up there again. That's it. That was the high. That was the high, and now we broke the low, or we will break the low right now. The low of the candle is 0022, and the low here is 0022. It will break now, and when it breaks down, then it will continue further down to there, and that's a trade. That's a 55 pip move on a 55 pip move on a 14 pip stop loss trade. If you don't, on a 13 pip stop loss trade, if you don't count for the additional 4 pips, that's a trade. That's the point. That's where your first bounce is going to be, here at this open of this price, which is about 830, or the open of here, which is about at 97.29. So that's the first bounce. It's going to be there, and that's the trade. So let's say price very likely will come here, which is from there. Yeah, it's about a 60 pip trade or 65 pip trade with a 13 pip stop loss. That's the trade. It's unfortunate that we didn't get entry. We missed it by a pip. Oh, I missed it by a pip. Now we've got 7 minutes for the candle to close. And yeah, that possibly was the trade for the session according to my trade plan. According to my trade plan, that was the trade for the session. That one there. because if you do continue to come down, then this is where we're coming to, 140 pips away from your entry. That's where we're coming to. Oopsie. Because that's the London low. That's the London high. Here, yeah, around there. That's a London high, around 2497. And the London low is about 2485.50. London low is 2485.50. And that's a London high. So if price continues to come down and candles begin to close below the London high, which is 2497, if candles begin to close below 2497, then we are coming all the way down to the London low area, or to this demand zone. We're coming here, right? And that's a 140 pip trade on a with a 13 pip stop loss without spread. So because once the H4 candle closes, which is in 5 minutes, there can be a rush of volume coming into the market. That can do one of two things. It could push price up, break the high of the previous H4 candle, which is 2505, which is the high of the previous H4 candle, break that high, grab liquidity and continue down, or just continue down. Just create a top wick on the H4 and continue down another 100 pips. Either of those two scenarios can happen. The first scenario is what the first scenario I wouldn't like, because that will stop me out. But now is a good time to close this trade. So we click delete pending and the trade is closed, right? Yeah, we missed that by a pip. So now we wait for the next setup. Same rules, same trade plan. We wait. Also, until the trade touches this, line here, which is 2495 on this fib, the trade is still not done. At least that's what I've seen and what I've experienced. The trade is still not done. So we got 2.5 minutes for this candle to close. It's very likely that we continue down, or the H4 candle creates a top wick back to this area of 2502.75, and then we continue down. Because if you go down to the M5, you see there is a small supply zone right there that has kind of prices broken this demand zone. We create a supply zone, just broken it. Or if you go to the M1, we see a supply zone here on the M1 time frame. So price could pull back here to 2503 and then just continue to push down to create the H4 wick. We can come up here and then push down. And if we do that, maybe I'll consider taking a trade here, right here. But then I would have to recalculate my lot size, because now it's 22 plus 4, it's 26. So I would have to go here and change this to 26. Now it's 0.06. So I would take 0.03 here and I would take 0.03 here, 10 pips away, or even the next 0.03 here. Yeah, that's better. 16 pips away. But let the candle close. Yeah, 22 seconds, the candle to close. It's very likely going to close here. So I'm going to push up in 10 seconds. So we're going to have a H4 with a big rejection. The H1 candle is rejected. So now I'm going to take a 0.03 right here. The open of this candle 2503. Modify 2503. Open 2503.02. Same stop loss as before. My lot size is now adjusted. And the next one here, just as before. Open 463. Modify 463. Same stop loss as before. Now the H4 candle is closed with a big wick. The H1 has rejected that 2505 weekly resistance. The H1 has broken the previous, so the low of the previous H1 candle was 936. This H1 candle has already broken this low, but we want price to pull back, not just jump in as the breakout. We want price to pull back, get us an entry, and then go down. All right, that's what we want. That's what we want. Will that happen? Doesn't need to, but that's what we want. The price is reaching our point here. Is reaching our area, our first area of there. That's the 249830. That's the first area. And the second area of, yeah, here. $2497.40. Then here, 22 pips away. Then here, 51 pips away from the first point. And then finally here, the H4 demand zone, which is 78 pips away. So if we did get entry there, price had pushed up, then we would have been taking the trade all the way down to the H4 demand zone. Yeah, price has rejected 2505 on the H4. The H4 has also rejected 2500. It's a psychological number. But in this hour, right now, this is the open of the new H4 candle. In this hour, in the first hour of the new 4-hour candle, price is usually searching for liquidity. That's what it does in the first hour. So now we are at, now it's 10 a.m. New York, just past 10 a.m. in NY. So for the next 45 minutes to an hour, price is going to be looking for liquidity. This is why it's not always, but most of the time, especially on non-news days. There's no news today. There is no news to bring liquidity into price. There's no news. So because there's no news, it has to search for liquidity. It has to collect liquidity. So within the next 45 minutes to an hour, price is going to be looking for liquidity. So, and your direction is probably going to come around 11 a.m. New York time. So if it's going to be, so if this is the rejection for the day, if this is, or if you want to call it the high of the day, if this candle created the high of the day, if it did, then price is going to continue down. If price needs to continue down, that's the high of the day. Then after around 11 a.m. or after around 10:45 a.m. New York time, the price will continue to move down. And this is the current low of the day. The London low is the current low of the day. So price will continue to move down to that low and continue further down if we have that much volume. I doubt it. It's a Monday, so price has moved 196 pips already. So does it have enough volume to move back down another 196 pips, 196 pips and continue down another, what, another 35? So that's about up to here at least, here. So that's another 46 pips. So that's a total of about 250 pips for the day. I don't know. It's a Monday. May or may not have that much volume to push down. Or if it does, if it has collected enough volume here, enough liquidity here, can it push up another 60, 70 pips, grab liquidity from higher up, and then make the move down? Either way, it cannot do anything until it collects liquidity. Because the price to make a 125 or 130 pip move down, it needs a lot of volume. And volume, to get volume, it needs to collect orders of the opposite side. Alright guys, just give me a second. Now for those of you who are using this indicator and for those of you who are using the buy and sell signals of this indicator, um, if you are waiting at these areas, right, at these areas at the high liquidity zone that I marked, right, and you wanted to take a signal from there, you will have a signal here. This one here. This one, no, because price had not come up here yet. So if you were taking that, this you still would have to wait. After price came here and price rejected, and once the H4 candle closed, so we have a M30 rejection here. That's a great signal to take, right, from the weekly resistance or from the supply zone. There's a supply zone here, H1 supply zone, or the beginning of the H4 supply zone. It's also a high liquidity zone. That's a good place to take a trade from, right? Or even this to take a trade here, right? This signal here. So when price breaks out, you can take the trade. Now, the only reason this I I'm not in favor of this signal from here is because even though price touched the weekly resistance, and that's just 6 pips away from the supply zone, it didn't touch the supply zone. I really personally I want price to would have touched it. I want price to touch it. Like similarly here, I didn't jump in on a trade because if price had touched this, then I would have immediately, as soon as price came even close to this sniper entry, I would have immediately opened a market order, sell market order. I wouldn't have waited for the pending order to get activated. But just because price didn't touch this, I just don't like that. That doesn't mean that it'll always touch it or it always needs to touch it. It doesn't need to. It doesn't need to. Sometimes this happens. It happens sometimes, and you do miss out on trades, and I do miss out on trades. But that's just how I trade. I want to get, I want it to be as per my trade plan, and I want price to come to me. That doesn't mean all of the trades that I take are gonna win. They won't. Okay, a big percentage of those trades don't win. But that's just my trade plan. Those are just my rules. That I wait for price to trigger a pending order. And the times that I do open a market order, I would have opened a market order here, is if price touched this, then I would have been comfortable. Okay, supply is touched. A high liquidity zone has been tapped, right? 2505, the weekly resistance has been tapped. Supply zone, H1 supply zone has been tapped. High liquidity zone has been tapped. Great. Now, I'm willing to risk my full 1% risk for the day and take that trade. Even here, even a pip away from my entry, I'm willing to take the trade. But it didn't. So we wait. So I wait another hour. That's the end of my about an hour. Yeah, about till about 11:15 New York time. 11:15 New York time is my maybe till 11:30 New York time. But that's it. After that, 11:30 is no trading for me. Okay, while we wait, maybe we can talk about more things on the indicator. So yeah, I can just run through some of the inputs on this indicator. It's there in the on the website on MQL5. You'll find it under the indicator. You'll find it, but and in the user manual, for those who have the user manual, all of it's explained already there. But since we're here, um, Yeah, so we discussed active hours. That's global settings for this for signal candles. So if you want a candle, if you say the signal candle must have a top or bottom wick to be considered as a signal candle, then you can use these settings, because here if you set it to 1 or 2, then it'll have to have at least a wick, a bottom wick or a top wick of at least 1 point or more to be considered as a signal candle. In this case, it's 0. The default setting is 0. This is a little complex, so I'm not going to get into all of these things. It's unnecessary. I'm going to just uh, brush over all of these things basically. SR level and candle structure, that is basically the support resistance level and the structure that's formed before the signal appears. So that's set at true 5 pips distance between. Yeah, distance between this thing is 5 pips. Um, Between the open and the close of the candle of the previous candle. So the close of this candle and the open of the next candle has to be 5 pips or less. If it's above 5 pips, then the candle would have opened somewhere here and it will not consider it as the proper structure. Then buy sell candle limit, then basically the signal candle has to be within the first 4 candles of the candle structure. So this one, this one, this one, and this one within that, right? Then the max distance from the SR level to the entry candle cannot exceed 125 pips. So within 125 pips, you'll get the signal candle. Then we have MACD histogram, which uses a MACD behind in the algorithm. There's a MACD that's been coded into it. So if you look at the examples, again, it's a little complex. I don't want to get into it here, but if you look at the user manual, it's very clearly explained how to use the MACD along with your current trading system or trade plan to get better confirmations on your trades. High probability, this is not there. Forget about this. This is not in use. It's not there on the version that's there on MQL5, because it was a thing that was used for beta testing, so it's didn't work. The algorithm didn't work there, so it's not there in the version that you get from MQL5. Okay, clean space detection, that is if there is clean space. So again, it's switched off here, it's none, so there is no color, otherwise it'll show you a dot when there is clean space to the left. So you can take signals only that have clean space, right? I don't use it. Liquidity runs, this is when you're trading ICT concepts. They have I'm not sure for those ICT traders if you're familiar with the Judas swing, stuff like that. Again, if you look at the user manual, it'll clearly explain how to trade a Judas swing. Again, these default settings, you can set it up the way you want. In the default settings, it's there, right? So if I go click reset on this, you can see that all of these settings change. Those are the default settings, right? Those are the default settings. So if you use the default settings and if you read the user manual, it'll show you how to trade a Judas swing. That's ICT concepts, and how to trade a Asian raid or a London raid. How to trade that, right? It's all clearly explained in the user manual. So that's basically, I don't use any of that. I don't trade any ICT concepts, but it's already configured to trade ICT concepts. Then then previous day high, previous day low. We got daily open, we got chart levels, we spoke about that. Liquidity and stop hunt levels. Again, look at the user manual, it shows you how price goes higher up above to grab liquidity to go down. You can use that. When you switch it on, you'll see how it works, and the user manual explains how it works. Again, I don't use that, so it's set to false. Support resistance levels, I don't use it. That's basically simple support resistance levels, not simple, sorry, dynamic support resistance levels. It's dynamic. So as candles open and close, sorry, as candles close, the support resistance levels change because it's dynamic, right? It's very important to understand that. A lot of indicators have very basic support resistance levels, so even if candles close above them, they stay as is. This doesn't. This changes when candles close above a certain support level or a resistance level. Then we have the crossovers and pullback, which we already discussed, and I showed you guys how I use it. This is the default settings how it's set to. Then we have signal arrows and alerts. That's the colors for it. You can set alerts for it, pop-up alerts, sound alerts, email alerts, mobile push notifications, blah, blah, blah. Then you have high highs and high lows. If you trade that way, you can put that on and look at how to trade that way. Then you have show entries. If you set them to true, it'll show you where to take your um, entries, where to put your stop loss, where to put your TPs as per the signal candle. Now, what I'm showing you guys in this session is not trading with the signals of this indicator, right? I'm showing you how I trade. So if you did not have access to this indicator, you could still trade the way I trade without any access to any of these tools, without the access to the trade manager, without access to this indicator, just by having a clean MT4, MT5 or C trader chart, you can trade the way I trade without any tools, just on a clean naked chart you can trade, right? I showed you guys how I draw supply demand zones at the beginning of the session. I will continue to do that for the rest of this week. How I draw my weekly support resistance lines, the daily SR lines. I showed you all of that. I'll continue to do that for the rest of this week. So the more I do it, the more it'll be clearer. And then moving on, we have candle countdown, symbol spread, which we already discussed, and the trading for panel, right? Cancel that, close. So price did come back to 2500 as we said and rejected that. So it didn't get there, pushed down, came back up here again, pushed down, came back up here again, and now pushing down. So you see how important the levels of these fibs are. So when we did discuss about the fibs and how I draw them and what the inputs are, um, like I said, what these inputs mean, 0, 0.25, 0.51, what they mean. They're so important because you can see how price very clearly rejects those areas. 2503.99 rejected, didn't touch. 2502.72 rejected, touch, rejected. 2500.17 touch, rejected, pushing down. Now the next spot is here. 2495.08 to the pip. It should touch it, right? Now, once it does touch it, that's your trade. That's your trade. From here to here, that's your trade. That's an 88 pip trade with a 13 pip stop loss. That's your trade. We missed it by a pip, but that's a trade. Now, when price hits here, when price hits here, if I'm still in the trade, I would look to take out majority of my position. So I would have about 10-20% of my position running after this point. If I got in here, then by the time the trade touches 7RR, I would take out 80% or 85% of my position. My stops would automatically be at break even at this point because it's set to stop loss at break even around 50-51 pips. So price has obviously moved a lot more than that. It's moved to 79 pips, right? So my stops would be, if we got here, my stops would already be at break even. So I cannot lose out on this trade. But once it gets here, 80-85% of my position would be closed. If it wasn't closed, I would manually close it, right? Just by using these buttons. If you don't have access to this, then you would close them manually, right? You would right click on the position. Your trade would be active here. You would right click and you would go to modify or delete order and you would close the position, the amount of lot size that you need to, right? And then whatever that's left, I would let it run to the opposite H4 demand zone. That's all it is. Once you get entry, you close a bit of positions on the way down, just a small bit, 20, 30%, 25%, 30%. By the time you come here, you've closed about 80%, 85% of your position at the end of this fib here. At this, once you draw it here, this is the last point of the fib. Beyond that, if there is a demand zone, or if there is a supply zone, if there is a zone, if there's an opposite zone beyond that, if there is a zone beyond that, you leave whatever that 10% or 15% of your trade is left, you leave it to run to the rest. That's it. Now, yeah, no. So, yeah, price did come there, bounce there. That was our point right there. Demand, H1 demand. If you go on the M30, yeah, right there, or there. Rally, base, rally, base, rally. See that? Drop, base, rally, base, drop, sorry, drop, base, rally, and price came down, drop, base, rally, base, rally, base, rally. And this is the first one, right? So we come there. That's your first one on M30 time frame. Now if you start to close below this base or below this demand zone, then the next one is here. When we close below this demand zone or below these two candles, if the price starts to close below these two candles, then the next one is here, the H4 demand, or here. That's how price moves. Price did reject here. Strong M5 rejection. Two minutes for this 15-minute candle to close. Step up four. Price is looking for liquidity. 30 minutes more. Looking for liquidity until 11 a.m. New York time. It's very important not to get trapped within that hour, within that first 45 minutes of the new 4-hour candle open. It's very important not to get trapped. A lot of traders do. They get trapped within that first 45 minutes to an hour of the new H4 candle open. Because it starts showing you that 1 hour price starts showing you a lot of things, a lot of possibilities, because it's ranging. It begins to range or creates some sort of structure that you can recognize, or that you've seen in the past, and you take it. But most of the time it's just, not always, most of the time it's searching for liquidity in that first 45 minutes to hour. So you don't change your setup or your plan, or you don't change your trade plan because of that. You just wait. Where you plan to wait, you wait for a trade. If because the 4-hour structure hasn't changed yet, right? We still have this demand zone here, which is a valid demand zone. Now there's a drop and there's a base. Right? All of this one considers a base, and this one close above that base, right? But I don't want to take a trade there, because anywhere in this area, because there's a zone below it, a better zone below it. And this drop, these 3 base-in candles, or these 4 base-in candles, and this leg out is very weak. This move up is very weak. So if you go down the H1 and look at it, now it's just here. Now it doesn't even show on that side. So it's just a rally and a base and a rally right here. So price did come there, did react. And if you go on M15, price did react to it, right? And I could say, okay, that's here. I could take a trade here, right, with a 13 pip stop loss again, right? Take a trade here. But it's weak. It's weak because price is already pushing down, has rejected to 500. It could easily break this and continue down, right? So already pushing down. Do we have just one M15 candle going up here? Pushing down. We made a high. We made a high in New York session. We pulled back. Not created M30 support to look for a trade to go up. It's just ranging. And I don't want to take a trade here. Even if it does work, I don't want to take a trade here, because this just could be collecting liquidity. I don't want to take a trade there. I want to take trades at the extremes. That's an area I want to take a trade at. And this area here, up here, I want to take a trade at. Don't want to trade in the middle. So now here's the other thing. Very important to remember this. Once price comes and touches this line, 249508, the last line of the fib, to me, this trade is done. It's done. I said this before, this trade is done. So at that point, I delete my pending orders. There's no point in holding it, no point in keeping it. because that's the move. Now price could continue down lower, as we said. It could go another 50, 100, 150, 200 pips lower. It doesn't matter. But this is the move. This is the place I wanted to get in at. 503.99. I missed that by a pip. That's the place. Price came twice. It came twice to my entry. I missed it and gone. Now we're approaching this. Soon as it touches it, pending orders get deleted. The move or the setup has played out. That is the setup that I wait for every day, Monday to Friday. Regardless of it being a news day or not, you saw on NFP what happens. The only difference on during news is that it happens faster. So price came up. You saw this. I showed you guys at the go back to the video. At the beginning of the video, you'll see how this play happened. Touched the sniper, came down. Right? I think we got in somewhere around here, and that was like a 395, almost like a 400 pip move, with like a 50 pip or 53 pip stop loss. Right? 400 pip move. That's the trade. Done. And if you draw, let me show you guys what I mean by when I say that this is done. When it touches it, it's done. Pending orders must get deleted. Let me show you what I mean by it. And this is just seeing the same thing happen for years. This high is 922 and the low is 769, right? 769, 922. Okay, that's it. So that was the entry. Anywhere between the sniper and that end is your entry. You gotta take on the entry once this candle closed here, this green candle, this bull candle closed. You take the entry, and look what happened. Price came and touched the, right? It says 7 hour, 2486.16, right? Touched, finished. Trade is over. What happens beyond this is what some traders call a fib extension. Right? Price can continue further down. That's an extension. You can always have a position running, but you don't try to enter here for a trade. You don't try to do that, because at least me, I want to get in at the beginning of the move. I don't want to get in the middle of the move. A lot of traders trade like that. They trade, retail traders and a lot of other traders, professional traders, trade what they call the middle, the meat of the move, right? They trade in the meat, somewhere in the middle. I'm not one of those traders. I trade at the extremes, at the beginning of a move, which I missed today, at the beginning of a move. That's when I want to get in. This is Friday's beginning of the move. 400, the beginning of a 400 pip move. This one. That's the trade. That's where I want to get in, right? That is Friday's trade. This is today's trade, right? So this trade could easily come back down to this level. Easily come back here. Easily. Could. Or could come here and push back up again. We don't know. But that's Friday's move done. And soon as price touches this is Monday's move done. Right? Now if I did get in here, I may have held 10% of my position or 15% of my position, because it's a risk-free trade. It doesn't matter if price, I would have held that 15% until the end of trading day today. I won't hold them overnight, but until the end of trading day today, and after the end of the New York session, I would have held it to see if price will come there. That would be my final TP, or somewhere here would be my final TP. These lows here, right? To see if price does come down, or even the London low, which is this, right? Somewhere here would be my final TP if I did get in there, right? But there is no guarantee. Price could come there, very possible, but could also come here and turn back and go up, right? Now we've touched it, so now we close, right? Touched, broke below, delete pending, trades get closed, move is done, get rid of this, finished. That was the trade there, that move down. There, if you got in, already up to there, that's a 100 pip move on with a 13 pip stop loss, or a 16 or 17 pip stop loss with your spread, right? But for argument's sake, let's not discuss spread. So on a 13 pip trade, right, or here, that's it, on a 13 pip stop loss, that's your move. When it comes to that final point here, this final point is the end of the trade. So that's a 100 pip move, right? Here, 88, 90, 100 pips, done, finished. At the close of this candle, you could close your trade. It's 100 pips on a 13 pip move, and the trade is closed. That's exactly the way I trade every day, Monday to Friday, every day, every week, every month. This is exactly. I wait for my setup. If I miss it, I miss it. I come back tomorrow, Tuesday. I repeat the same process tomorrow. I draw my zones. The weekly, first I look at this. These are weekly support resistance levels. They don't change. They remain the same for months, right? These lines, once you draw them, they remain the same for months. Look at this line was drawn. This line was drawn somewhere here, I think, right? Yeah, somewhere here it was drawn, right? That was in May 24. We're we're in September now. 4 months, 4 months away, and they're still. So these lines remain for months, right? 3, 2, 3, 4, 5 months they remain, or even longer. So those lines are drawn, and I adjust them uh, maybe every few months. You adjust them according to weekly SR levels, right? And then you look at your daily, which I've done here, right? This is your. We discussed this. I showed you guys how I do my daily. Let's get rid of that. That. Let's get rid of that. Okay. So daily SR levels. Whenever there is daily support resistance created, you put a line. If there was a line close to it, a few pips away, you bring that line and you readjust it. You don't redraw it, you readjust that same line to the closest support resistance level, like I did today, right? This line was a little bit higher. I think it was probably a little bit high, adjusted it down, and it came up here, right? So these are the daily support resistance lines. Those lines are not important. They are not important. They're not a part of my trade plan. They are not a part of my trade plan. No, not. Okay. I keep them because some of the guys in the group, they use that. So it's just the yellow lines are what's kind of important to me, the yellow lines. And then I go down directly from there to the H4 time frame, and I draw my supply demand zones. And we did that today. We did that live. We did the supply demand zones today. So you saw exactly how they were drawn. I'll continue to do that. And the difference between a normal supply zone, so that was a supply zone, right? You saw that when we started the session, there was a supply zone right here, and it was not a high liquidity zone. So you can see how price very easily broke through the supply zone. Even though it was a supply zone, it broke through it because it wasn't a high liquidity zone. That doesn't mean to say that price doesn't break through high liquidity zones. That's not what I'm saying. But price will break a zone very easily if it's not a high liquidity zone. That's what I'm saying, right? It'll break it very easily within one candle, one H4 candle may break it like it did today, because this zone hadn't engulfed a demand zone. There was demand zone. This push down. If he had taken this zone out, then this would be a high liquidity zone. He didn't, right? So price broke through. Instead, this was a H4 demand zone and is a H4 demand zone. It was just an H4 demand zone until price broke this. Now price broke this. So now this has become a high liquidity zone, and I'm waiting for here. Now price might come here later in New York session and then push up, or in Asian session tomorrow it might come here, range until Asian session, and during Asian session it might push up. I don't know. I won't be at the charts then, right? I will be at the charts for one particular move, exactly like I showed you today, exactly like what happened on Friday. One specific move. That's what I'm waiting for, right? I call that's my move for the day. My move. That's my correct move according to my trade plan. That's the correct move according to my trade plan. That does not mean that move will always win, but that is the move that fits my trade plan. It's the correct move for my trade plan. Okay? So price broke through here, and now we still have this. Price has still not come here into this area. So this is still an H4 supply zone, and it is a high liquidity zone still, right? So price has come down here. If it comes down here, hopefully to New York's in New York session, if it does come down, I'll look to take a trade tomorrow. Or if it comes back up here in New York session tomorrow, I'll have to take a trade. But that's a whole day from now. Anything can happen between now and New York session tomorrow. Price can move up 400 pips, 500 pips, 100 pips down, 200 pips down, 300, 900 pips down. God knows, anything can happen. So what I'm trying to say is when I come back for New York session tomorrow, 20 minutes, 25 minutes before the New York Open, when I come and sit at the chart, I will do this whole process again, drawing of the supply zones and demand zones, and marking what is a high liquidity zone. I'll be doing this process. Not this. This I won't do, because this, as I said, lasts for weeks and months. These boxes, I'll be redoing these. I'll be redoing these and checking um, to see if to see what the new zones are. So I start from blank chart, and I redraw them. Okay. So yeah, now we have I have about 30 minutes left, and yeah, about 30 minutes left. Since what we can do is we can talk about the trade manager that I use. So this is one of the first trade managers um, that I built for my use. It's not the first version of it. It's probably the 75th version of that trade manager. It's the one that to me works perfectly for those who want to be very um, risk, who want to control their risk, who don't want to give away money to the market, basically. So if I go and just make sure I've saved these settings. Smart keys gold, save. Yeah. Okay. Now if I hit the reset button, you will see the default settings, right? So you can set I'll just talk about this for about 5-10 minutes here. You can set it by fixed lot or percentage of balance. You can set whatever value that you have there, percentage of balance or lot size. Okay. Um, then you can set a stop loss level that you're comfortable with, readjust it. It's not hard. It's not a hard stop loss. So which means once you set it here, you can always adjust it on the chart, which is easy to do. You can set your take profit levels again. It's not hard. All of these can be adjusted. Then your stop loss to break even, which is a very good feature. With price moves in a certain in your direction, your stop loss will automatically come to break even very quickly, so that you don't lose anything on that trade. Then there is a stop loss in profit pips, so which means see if you are trading a raw spread account or an ECN account, you are going to have to pay commission. So this covers even that. It gives you the opportunity to cover that. So you can put it'll move 10 pips plus another 0.9 pips from that 10 pips, right? So even if you get stopped out, you won't even lose the commission on that trade, because even that's covered. You can look at the user manual. If you do rent out the indicator, you can look at the user manual, or each of these settings are explained very clearly with examples. Then there is partial profit. You can put up to 3 levels here. 3 levels, right? Not just 1 or 2, but 3 levels. You can put it at 10 pips, 20 pips, 75 pips, or 100 pips, or whatever. You can set up any 3 values that you like. And then partial close percentage, that will close percentages of your position at these levels. So again, you can set up to 3 percentages of your choice. Then your close custom button, you can set it up to whatever that you want. So when you hit close, if you don't want to use the 50% and the 25% standard buttons, you can put a percentage of your choice here. Then your max daily gain. So let's say, for example, if you hit a max daily gain, if you want that at true, let's say if it's 1.5 or 2%, once it hits that, the trades will close. All open trades, once you hit that value, it'll close, right? Then if you want to see your trade history, you just set this to true, and it'll show you your winning trades and your losing trades. It'll show you where your entry was, where you hit break even, or where you took partial positions, or where you hit your TP. It'll show you all of that, right? With arrows. If you don't want that, you can set it to false, right? Now here, aggressive risk control, which is very important. You can limit the number of trades that you take. So to limit over trading, this is one of the few, almost I have not seen any trade manager that has features like this, where it lets you aggressively control your risk, aggressively manage your trade in terms of losses, right? So here you can set it so to control overtrading. Those traders who have a problem with overtrading, who take 5, 10, 15 trades a day and want to control that and aren't consistently profitable because of that kind of overtrading, you can control the amount of trades that you take, right? So if you set this to a certain value of 2, then your trade manager will allow you to take only 2 trades, and beyond that, no matter how many times you click these buttons, it will not open any more trades, right? Then ARC level 1, aggressive risk control level 1, which means if your trade, okay, I'm not going to get into this because this is very complex. I would have to open up examples. If you go on to, let me just open it up here and show you guys what I mean. Right, here you go. If you just go in here, aggressive risk control settings explains all of these risk control settings with examples, right? So you go here, it shows ARC 1 example using default settings. If you open a trade, where you open a trade, buy entry, what happens, and how the percentage is automatically closed when this happens. ARC level 2 example using default settings. Number 1, this happens, the buy trade opens as price breaks the previous candle high. Then price goes up 7 pips in profit and retraces. 50% of position automatically closes when price retraces back to the entry price. When it comes back to this entry price, 50% of your position. Now, again, you can set values, whatever value that you want. It doesn't have to be 7 pips. It can be 5, it can be 10, it can be 50. This percentage can be whatever percentage you want, right? These are just the default settings, right? As explained here, this is the previous candle. This is the entry candle. Look what happened. Price went up, came down. If you had your full risk, what happens? You got stopped out. But by using aggressive risk control, ARC level 2, you were able to lose less than what you planned. Same with ARC 3, right? All of these input levels using default settings. Buy trade opened as price breaks previous candle high, trade goes in profit, then retraces and goes in drawdown. So here's your buy entry at this. At the breakout of this candle, goes up because there is clean space here. You think that this price is going to continue up, goes up. We're on the M15 time frame here. You can see it here. Price comes back, breaks the low of the previous candle. Previous candle is this, breaks the low. 50% of your position automatically closes when entry candle breaks previous candle low, right? So before the trade goes and hits, if your stop loss is here or where, before any of that happens, you've already started closing positions automatically. So you do not have to be at your desk when you're doing this. You can set it up the way you want and walk away. Take your entry and walk away comfortably, knowing that you're not going to lose your entire risk. Same goes with ARC level 4. You can change these time frames to whatever time frame that you want, right? These are just the default settings. You can change the time frame, you can change the percentage, the number of pips, all of that. Then H1 time frame. and then H4 time frame. You can again change it. You can use the daily time frame. You can use whatever time frame that you want. But they're all very clearly explained here. Okay, and then once you do rent it out, you will get the user manual, right? After purchase, please private message me in MQL5 for the user manual. Send me a private message once you rent it out, and you will get not only the user manual, you will get access to the private mentorship group for free, absolutely for free. It's the group that I just showed. It's this group. You'll get access to this group, right? So in this group, you'll find topics for each of these. You can ask questions. It's a support group. There are a lot of traders in here already. You'll get information on risk management. You will get a ton of education. That's the most important thing about this group. Tons of education. You will get a lot of my examples, voice notes, a ton of it. And I've, I've made it easy. I will give you the exact days of the exact date that you need to go to. So you can just go search, put in the date there, just go search here, put in the date here that you want, and it'll take you to my lesson, how to draw supply demand zones. Everything, how to trade the Judas swing, how to trade liquidity runs, the London rate, the New York rate, how to trade the Asian rate, the London rate, how all of these things. There are lessons on each of them. You'll get access to all of that, and it's all for free. You'll get the dates, so you just have to put in the correct date here. It'll take you back to that. It'll take you to that lesson with examples. You'll be able to clearly see what that input means or how I trade it. And you will also get this. Let me just open it for you. Yeah. You will get this. This is the next. This is the, apart from the education, equally, this is the next most important thing. And they're completely for free. You get the user manual. When you purchase the indicator, you get the user manual. And you get, this is the user manual. You can see how many pages. It's 27 pages, right? It's a lot of work that's gone into this. And you get my personal trade plan, which I've been trading for over 6 years, right? You get my trade plan, how I've been trading gold, right? Very clear, rule-based, non-subjective trade plan. Okay? Setup 1, explanation. Setup 2, explanation. Setup 1, examples, right? Loads of examples with the exact time that it happened. So you can go to your chart. You can go to your chart and you can go to the date and you can see how the trade played out. You can go exactly to the date on the time frame on your MT5, MT4, IC markets, C trader, any of your charts that you use, you can go see how the trade played out, right? The date is given here. Now, the indicator and the trade managers work only on MT4. There is no C trader version of it, there is no MT5 version of it for now. All right, so it's only on MT4. So you can always, if you are using MT5 or using C trader, you can always load the indicator, the price action, the price action entry alerts indicator on an MT4 demo account, and you can trade those signals on MT5 on CTrader, or you can load it on a MT4 demo account and use a copy trader software to trade it on your CTrader live account or your MT5 live account. That's possible too, right? So you get all the examples that you need. Get all the examples that you need, and then you get setup 3, exactly how I trade the third setup. There are 3 setups that I trade, and those are 3 setups that I explain, that I share every day in the analysis and execution in the group. And then if you go to IG Chart Whisperer, on my IG, or if you go on X Chart Whisperer 1, you'll see the trades that I take for the week, right? And then there's a section called the Power of 3, explains basically what I mean, how to have a macro understanding of what price is doing. Okay, so that's basically it. So yeah, this is coming towards the end of the trading session. Price hasn't moved much. It's just moved. Just made this move down, 100 pip move. Apart from that, it's unmoved at all. So if you did take that sell signal there, the breakout 45, yeah, that was easily 60 pip trade. So if you did take, if you are using, if you're using the indicator signals, right? I'm going to switch to downtrend because there is absolutely no reason that we should be looking for a buy signal close to a supply zone. Yes, that's clearly said in the analysis in the group. So we'll be looking only for downtrend. So you've got to switch on. Just click on that. You'll see only the sell signals, and that's the perfect signal to take. That's the signal. Perfect. You take it as price breaks out. Stop loss goes above the candle, or 2 pips or 3 pips above the candle, whatever spread that you're comfortable keeping, and that's your trade, right? And price could run lower, okay, but that's your trade. So if you were trading the signals of the indicator, this is the signal that you would take, not this. The reason I explained why you wouldn't take this, because price hasn't come to our area of interest yet. This 2505 was important to us, and the supply zone was important to us, right? It hadn't come there yet. It was well away from it. A good 16 pips, 10 pips, 10, 16, a good 10 to 17 pips away from it. So no, to me it has to touch. That's the only reason I didn't take even this trade, because it didn't touch it, right? But since it touched this, and this is valid because it touched it, and that is a very important level, because 2505 is weekly resistance. You could have taken this trade now down, to go down 1 hour. You could have closed 50-60% of your trade and leave the rest to run to the opposite H4 demand zone, which is very likely to happen. Price will probably run into it during the course of the day, probably run to it over the next couple of hours. As I said, price collected liquidity, right? That's what it needed to do. So this was the if you go down on the M15 time frame, this was the open of the candle. This was the open of the new 4-hour candle, right here. This is exactly where it opened. Look what it did. Went up, went down, went up, collected liquidity, went down, went up again, collected more liquidity. Now it's making a move down. Now you can see it was just collecting liquidity here, right? I said this would happen. And where did it collect liquidity from? 2500, right? Psychological number 2500, collected liquidity. And if you go back to drawing our fib the way I draw it, look where it collected liquidity from. 2517, exactly where the psychological number is, right? Now I don't take these trades, but you can, because price is it's pushing up there to collect liquidity. But I don't take these trades because I wait for a trade only here. But that's just me. That's how I trade. but price did come up here. I don't have a trade plan for this, so I'm not going to suggest anything on this. I don't have a trade plan of how to take a trade here or here. I don't know that. That's not part of my trade plan. Uh, I'll never get into it either. That's where I take a trade, and it didn't come there, and I come back tomorrow and do the exact same thing, because that's the RR I want. For the 3 hours that I put into a trade, this is the RR I want. 13 pips, 88 pips. How much is that? 88 divided by 13. 7 hour, right? 6, yeah, 7 hour. Roughly, close to 7 hour. About, with your spread, about 6.5 hour. That's the kind of trades I want to take. Sorry, guys. Something in my throat. All right. So, for the 3 hours that I spend on the charts every day, and for the time I spend, the 20-25 minutes that I spend time doing an analysis, if I'm to take a trade, I want to take a low risk, high probability, high reward trade. That's what I want to take. It, you don't have to take those kind of trades to be profitable. You don't have to. I know dozens of traders who are a lot more profitable than I am taking different kinds of trades. But those trade plans work for them. Their trade plans may not, they does not work for me. This is the trade plan that works for me. This is how I trade. I want this RR with this stop loss, small stop loss, and this RR. This is the trade I want to take. And if it didn't work, it didn't work. And if I do lose on a trade like this, I'll come back and look for the exact same thing the next day. All right. So, having said that, this is the end of the session. Yeah, just wait for this. Just wait for this candle to close. Wait another 15 minutes. Wait for this candle to close, and yeah. I hope to do this for the rest of the week. Um, let's see how it goes. Let's see how it goes. Okay. Alright guys, that's the end of this session. Been here for 3 hours 40 minutes. Okay, let's wrap it up. I'll be plan to do the same thing for the rest of the day, for the rest of the week as well. So see you guys tomorrow.